Lumax Industries and Fiem Industries, end-to-end lighting solution providers for automobiles, posted an in-line set of numbers in Q4 of FY20. In our ideas for profit today, I'll discuss whether these companies are worth adding to the portfolio for the long term for investors. Well, let's look at the earnings highlights first for the Q4 quarter. Now, Q4, Lumax net revenues from the operations had dropped 10.5% year-on-year. They were hit by production cuts by major original equipment manufacturers, or OEMs as they are called. Now, on the profitability front, the company surprised with EBITDA margin growing 158.3 basis points from a year ago. Now, this expansion came on the back of cost control measures, also insourcing of the electronic business, and as well as the soft raw material prices. Now, same was the case even with Fiem Industries, which recorded a year-on-year decline of 10% in its top line, led by the decline in demand in the overall two-wheeler industry and also the production cuts by the OEMs. Now, interestingly, despite the degrowth in the top line, again EBITDA margin remained mostly flat. Now, this was due to the soft material prices or raw material prices, as well as the reduction in the employee expense for the company. Now, the two-wheeler and the passenger car industries were operating in a tough environment even before the COVID-19 pandemic had struck. Now, this pandemic brought everything to a grinding halt for some time. However, after the easing of the lockdowns, there has been a sharp recovery in both the two-wheeler industries as well as the passenger car sales in the month of June. Now, we believe that the situation is likely to improve from here on as well, as the production at the original equipment manufacturers front has resumed at a decent pace, and thereby there is a pent-up demand which they will address too. LED penetration in India is still very low, about 20%, and hence there is a huge potential for the company both in terms of the sales growth as well as the margin expansion going forward. Now, LEDs are high value and high margin products for these companies, and they contributed around 34% of Lumax sales and 39% of Fiem Industries sales in FY20. Now, Lumax management has set a target for LED sales to reach 50% of the revenues eventually, whereas Fiem Industries management has actually indicated that the contribution is likely to reach 50% just by FY21. Now, the newly implemented Bharat Stage 6 rules require vehicles to be more energy efficient, which is expected to lead to a faster adoption of LEDs. The managements expect huge growth from this transition, as this increases the content per vehicle. Now, even prior to COVID-19, Lumax was already focusing on the rationalization of costs through localization and backward integration. Now, their efforts have started yielding results already for the past 4 quarters, and indicating that the management's focus towards and efforts towards the cost reduction will continue in the months and years to come. Now, Fiem has also started managing the cost in the light of the pandemic, which has really helped it maintaining its margin in the quarter gone by. Now, though the weakness definitely continues and is here to stay for a quarter or two, the outlook for the long term remains positive on the back of expectation of significant demand recovery, also focus on margin improvement, just like how we've talked about, through cost reduction and localization of the imported products, as well as increasing adoption of the LED based products and increase in the content per vehicle due to Bharat Stage 6 implementation. Now, Lumax currently is trading at a valuation of 13.5 times FY22 estimated earnings, and Fiem currently trades at valuations of 12.6 times FY22 estimated earnings. Now, these factors make these companies strong candidates for a long-term equity portfolio.